Hello! Today in less than 5 minutes, K&G International Advisors will give you a summary of last week's most important international financial news, focusing on debunking false narratives of de-globalization. A narrative connects events to form a story. Humans have evolved to connect emotionally with stories. They give context and meaning to events, whether fictional or in the real world. Narratives can be extremely powerful, giving rise to religion with billions of followers, or spawning modern nation-states that span over entire continents. Narratives have energized humanity's greatest achievements and fueled its most appalling crimes. Therefore, narratives matter, and so it should not be a surprise that they matter a lot for investors in financial markets specifically. The movement of capital in global markets, which determines prices and investment returns, are directed by people who have evolved to connect emotionally with stories. Some narratives are very helpful in contextualizing the realistic view of where the world is heading. This can then determine how to allocate investments today. But some narratives can be deceptive. They offer an allure of making sense of a complex, often random world by offering a story which seems to make sense but is in reality false. It is not really explaining what's going on despite claiming to. False narratives in investment are dangerous, as they can convince investors to move capital into or out of investments which appear to fit with the story being told. When false narratives become dominant, gross misallocations of capital can occur. This results in overvalued assets, where false narratives support a particular asset class, and significant undervaluations elsewhere. We will be over the upcoming episodes analyzing what Dominion thinks are the major false narratives in financial markets today, which are growing in popularity, and explain why we think they don't match up with the reality. This week, we'll start with the idea of de-globalization and why Dominion thinks it's alarmist, overblown, and deceptive. The pandemic, growing hostility between China and the West, and recent supply chain disruptions have led to calls for reshoring the return of manufacturing to developed world nations at the expense of China. Globalization is the process of integration of economies and supply chains across the countries to form an increasingly global system of capital, goods, and services. Over the last 50 years, this has led to a first manufacturing and more recently managed service jobs to move to lower-cost countries. This process has simultaneously lowered the cost of goods and services for developed world nations and acted as a catalyst for economic development for many emerging nations. This process has come at the expense of many middle and working class jobs in the West, specifically in the US and UK, with significant political and social consequences we're still living with today. The de-globalization narrative goes something like this. A strong political and economic requirement to reshore manufacturing and raw material supply has emerged from the pandemic, as well as a result of the escalating geopolitical confrontations with China. Further, China's rapid economic development and aging populations means its supply of low-cost labor has dried up, and wages there will have to rise. De-globalization will therefore take the form of previously cheaply manufactured goods now having to be made at a much higher price in Western nations or Western-aligned nations. This process, happening across all major sectors in the economy, will act as an inflationary force, pushing up prices as a result and acting as a drag on growth with living standards, reducing international trade, and acting as a headwind for global economic development. Now, don't get us wrong, this is a compelling story. It fits with what we see happening in the world today and sounds, at face value, like a good idea. Maybe we should not be so reliant on China for our manufactured goods. Also, maybe we should bring back previously lost jobs in manufacturing to the US or UK. Dominion thinks that debunking this false narrative can be done quite easily. We encourage listeners to go and just dust off a world atlas, or for those who are more tech-savvy, do an internet search for world map. A reasonable first observation might be, wow, the world is really big. A second reasonable observation would be, damn, there's a lot of countries. The de-globalization story seems to rest on an implied assumption that there are only a handful of countries in the world, China and then the West. The reality is that there is 193 countries, even in Southeast Asia. There are multiple high populations, low-cost, well-connected countries where manufacturing can and already is moving to. For example, Vietnam, that has a population of 97 million. Thailand has a population of 70 million. Bangladesh, 165 million. Indonesia, 217 million. Looking at not much further, from Southeast Asia, there's India, with a population of 1.4 billion. And then, of course, there's Africa, with a current population of 1.3 billion, expected to reach more than 3 billion by 2040. The talk of needing to move manufacturing out of China and back to high-cost developed nations seems oversimplified. In our view, why move a plant from China back to the US when you can move it to a third country with even lower cost than China? Assuming that rising labor costs in China equals a global labor shortage is at best short-sighted and at worst a little ignorant. You just need to look at the demographics of the countries already mentioned, let alone many others we have not mentioned. There are a lot of young people around the world who want to work and will do these jobs. Dominion thinks that the truth is that globalization is just starting to get going and has a very long way to go. That's a good thing. The economic miracle in China that has lifted 1 billion people out of poverty since 1990, that's going to happen in the rest of Asia and in Africa. Western dreams of a return of manufacturing jobs need to face reality and focus on what they are good at, and perhaps consider a fair distribution of economic success with those who did lose out to globalization. What this means for investors is that they should be cautious of any allocations which have an implied assumption of deglobalization. Global supply chains will adapt, and they have, as discussed, a lot of options for where to move to in response to global events. This is also, as Dominion Capital thinks, offers an interesting investment opportunity. Betting against the false narrative of deglobalization means investing in those countries likely to be the next beneficiaries of globalization continuing. That means countries like India, Indonesia, Vietnam, Thailand, Mexico, Brazil, Nigeria. This may offer investors exciting long-term opportunities. We think that long-term pays to be optimistic. The sources used on today's video were Yahoo Finance, Bloomberg, MarketWatch, and Dominion Capital Strategies. My name is Juliana Lato from K&G International Advisors, and we wish you an excellent start of the week. Also, we'd like to thank you for watching our video. Don't forget to subscribe to stay updated on all the important financial news, and don't hesitate to contact us if you have any queries or further comments.